Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, with me Shail Patnagar. This is Market Today, a show where we'll help you understand the closing action on the day street. Subdued trade on the benchmark index Nifty right now. It's come off the day's high point, so a 13-point of a cut can be seen on this one, hovering around 22,200 odd mark. It's the Nifty Bank that's exerting some pressure. Half odd percent decline can be seen on the Nifty Bank right now. 47,631 right now for this one. A 233-point of a cut that can be seen on this index. We've also seen the broader markets, the mid and the small caps, come off the high point of the day, but still holding on to about 0.5, 0.6% of gains as far as the mid cap and the small cap 100 indices are concerned. It's been a choppy trade thus far, but it's still holding up and has not really given up that much of gains. When we talk about the sectors along with the banks, it's autos that are seen declining in trade. Financial services are down. FMCG is down by 0.8% or so. Private banks are also down by about half odd percent, so the heavy weighted sectors are definitely creating some kind of pressure. What's holding up in this kind of a subdued market? You can see PSU Bank still holding up about 1.5% higher in trade in the index. As far as the Nifty Realty Index is also concerned, that's also up by 1%. Oil and gas, consumer durables, metals, pharma, these are some of the other sectors that are still holding up into the green right now. As far as the top movers on the Nifty are concerned, the screen has not changed that much from the morning trading action. So you do see Cipla as the top of the chart as far as the Nifty is concerned. You have Coal India, M&M, Power Grid, NTPC, BPCL, Bharti Airtel. These are the stocks that are actually hovering as the top movers on the Nifty. On the downside, you still have Eicher Motors, Asian Paints, HDFC Bank, Bajaj Auto and Tata Motors as the stocks that are declining as of now. Good afternoon, Shail.
Good afternoon, ladies and gentlemen. Let's take a relook at the Nifty from the point of view of it being T-1, which is the weekly expiry tomorrow, as also the Bank Nifty, which is undergoing its weekly expiry. So the good point as far as Nifty is concerned is that we haven't broken below 22,200, which is such a relief. From 10 a.m. onwards, this is the price point. So the Nifty's range is narrowed after 3 successive days of gains: Friday, Monday and Tuesday. So that's a big plus. Let's hope that 22,200 remains with the bulls. Now let's look at the Bank Nifty. It's been pulled down by HDFC Bank, but today's the weekly expiry, so one can't really complain. That's fairly okay. The piece which is causing a bit of unrest is the volatility in the volatility index, which is India VIX. Now mildly in the green. It's been vacillating between losses and gains, so one has to keep that view in mind. Sakshi, there is barely any volume in the market today, so one can presume that over the last 3 days that we've gained, somewhere like 350 points on the Nifty, is what is being digested by the market as of now. Remember, there were 2 heavy news days as far as Monday and Tuesday was concerned. The 4th round of voting, and of course Mr. Amit Shah's, the Home Minister's interview, calming the market. So a day of pause, a day of peace, and of course a day of reckoning also. Let's see what the market does, but volumes are missing unless you are news driven. You are Siemens, then there is a 7% uptick after a fabulous set of numbers, 1800 crores worth of transactions, which is a huge volume, plus to the tune of somewhere like 4.8 times. There is Oberoi Realty running ahead of numbers, again a record high, 4% higher, 10 times the 5-day average has been traded. If you remember KEC International, I think this was the lone stock that Gorang picked up today. 8 times the 5-day average, the counters up 5%. So there are news driven events that are happening, and there is of course a mild bout of profit booking happening in some PSU counters, but the earlier enthusiasm, Sakshi, that we saw in the market is at this point of time, ladies and gentlemen, missing. Early morning advance decline ratios were somewhere like 1800 to 300 advance and declines. At the moment we just have, let me just get you the right number, we have just 1400 shares in the green, and the declines have risen to about 800. So the market band is narrowing, and bulls are slowly resting after 2-3 days of very solid gains. My point, Sakshi, is that India VIX should remain flat and Nifty should close above 22,200. I believe Kiran sir has joined us. Mr. Jani, a very warm good afternoon to you. Any stocks that catch your fancy in this kind of market? Would you be buying into Siemens now, or is the time to pause?
Good afternoon, everyone. So overall, if we check the market, the way volatility is getting cooling off, we are expecting some range-bound trading sessions has to be happening in 2 or 3 days. Now coming to the stock specific idea, Biocon is on our radar. If you check Biocon chart, the stock price on weekly chart, on weekly time frame, it is giving a breakout from long-term perspective. Since last 7 or 8 weeks, price were not able to cross its 300 level. Now stock price is crossing 300 level, number one. Number two, if you check daily chart, on daily chart, we can see some flag pattern breakout is there. Today's stock price was open at 310, 315 and then went up to 321. Could not sustain those level, but still we are expecting Biocon can be the stock which can outperform in upcoming time. So Biocon is catches our eye. At current market price, anyone can go long with keeping a positional stop loss of 300, and looking at overall long-term chart, we are expecting price target of 350 through 360 in upcoming time. So Biocon is one of our preferred pick. Another counter which we are like it's Campus. It is into the footwear, Campus activewear. If you check daily chart over here also, the inverted head and shoulder pattern breakout is given by the Campus, number one. Number two, stock price is trading above its 20 and 50 days moving average. And lastly, the momentum indicator is supposed to getting into the bullish zone. So here also, the chart setup is very good. Anyone can go long on Campus at current market price. Keep a very strict stop loss of 240, 235, which is the right shoulder of this head and shoulder pattern. And the way the price pattern is looking, we are expecting price target of 290, 300 in upcoming time. So Biocon and Campus both are our preferred pick.
Okay, good afternoon, Kiran. Thanks for joining in. I'll ask you on specific stocks which are reacting to earnings also. So PFC came out with the earnings on Q4. The asset quality has seen an improvement. Profit is up by 18% at 4,135 odd crore rupees. Revenues are up 20% on a year-on-year basis too. Now, how do you see the stock? The company management has also specified that they are still examining RBI's order on project financing, and even though they have said that there would be no impact on profitability going forward, the stock is up by 4%. It's been an outperformer in the power financing space. Would you still go ahead and buy this one?
So overall, looking after the commentary and the daily price chart, the stock price was consolidating near its 50, 20 and 100 days moving average since last couple of days. Recently, we have seen some bullish hammer candlesticks being formed on daily chart. Now, stock price has closed or trading above those hammers high, number one. Number two, if you check the weekly chart or you check out the weekly chart, the falling trendline breakout is there. And on intraday charts, we can see some rectangle pattern is also getting breakout. The way today's volume is happening, it's more than average 20 days volume. So it's clearly giving us that price is rising with higher volumes, and on open interest side is also giving a long built up position. So multiple reasoning is there that the stock can keep outperforming in the coming time also. So at current market price of 435, 430, definitely anyone can go long on power finance to keep positional stop loss of 420 rupees. If stock price is not crossing below 420, then there are chances we can see price target of 465 to 470 in upcoming time. So definitely PFC would be the candidate in energy power finance corporation can go long.
Okay, sticking with the power space, Coal India has moved to the top spot as the top mover on the Nifty right now. It's 4% higher. What do you foresee here?
So Coal India, if you remember the last week when we get connected on your channel, the Coal India were trading somewhere around 430 rupees, and we suggested to go long on those particular level. After that, Coal India made a high of 480, but during last week, whatever the corrections has happened, Coal India retested its previous breakout level of 430. And from that level, we are seeing that there is a furious move today from 447, 448 to 466. So overall chart pattern, it's very good. On daily chart, it has given a breakout from its falling trend line, number one. Number two, stock price has multiple support of 20 days and 50 days moving average. So definitely Coal India is catches our eyes. At current market price can go long, keep very strict stop loss of 450, and looking at price chart, our initial target is 490, and once the 490 level cross, we can expect 530, 540 kind of level also. So definitely Coal India can be the stock in power generation where we can go long.
Okay, ladies and gentlemen, let's also look at prices which are slipping dramatically despite a very strong set of numbers. Look at Colgate. The company came up with earnings yesterday, and the earnings were really good. About 20% rise in profit after tax for the fourth quarter, if I remember correctly. Now the counter is amongst the top losers as far as F&O is concerned, down about 5.5%. And this is, as I have said, accompanied by a very sharp rise in open interest. So that essentially means that people are exiting the counter. We've discussed Coal India and of course Cipla in some detail since the morning. Let's also look at Bharti. The reason why I ask this question is fairly simple. Earnings were below expectations, and yet the stock has shown little, in fact no signs of correction. It's up about 1.2%, and this is accompanied by a rise in open interest as well. While Bharti remains a low beta stock, but the fact that the market has chosen to ignore this muted performance points to perhaps incoming rise in call rates. Kiranji, what are the charts of Bharti telling you? 1306, fairly close to a record high.
So as you mentioned about the derivative position, the 1% open interest get changed on Bharti at L number 1. Number 2, during this hand change, we can see that price is also rising. So it's a clear-cut long beta. And one more thing I just wanted to highlight, if you check out the volume, it is more than 140% of today's volume, which is greater than the last 5 days volume. So it's clearly showing that price is higher, price is going up, volume is going up, and open interest is going up. So it's a combination of derivative and the normal equity trading that prices can keep moving higher. Secondly, on technically, if we check, the stock price has given a breakout from its ascending triangle pattern, number 1. Number 2, recently stock price has made a high of 1350, and from that level we have seen that prices crashed to 1260, 1270 level, and stock has found 20 days moving average support, and from that again stock price is moving into the higher top higher bottom pattern, and today we are seeing that since last 10 days high stock price is taking out, and results are also there. So we can expect prices to again touch its previous all-time high somewhere around 1350. So at current market price 13.8, 13.7, anyone can go long. Keep very strict stop loss of 1290, and we are expecting price target of 1350 in upcoming time.
Okay, that's the view that's coming in on Bharti. I think the other segment that we forgot to ask Kiranji is how the Adani set is performing. Very strong traction over the second day running. Now 8 out of 10 Adani stocks are in the green. Anything that catches your fancy, Kiranji, in this space within the Adani stable? Any long positions that you would like to discuss even now?
Yes, on Adani pack, we are liking two stock always. That is, one is Adani Power and another is Adani Port. So let's discuss Adani Power first. So if you check Adani Power, the whole power sector is going up, in power generation or even a power distribution stock. So Adani Power, if you check out the chart since last couple of months, if I'm not wrong, since April, the stock price has made a high of 640, and from that level we have seen prices corrected to 570 level and found 50 days moving average support, and from there again it's trading into the height of high bottom pattern, and now it is giving a breakout of its 640 level, sorry. So considering its all-time high pattern breakout, rectangle pattern is also there, momentum indicator is also trading into the bullish zone. So Adani Power, we can like to go long at even a current market price. 640 is the current market price. Keep very strict stop loss to 600. Because of its high beta stock, we are keeping a slightly higher stop loss of 600. And looking at price chart, definitely 700 plus target you can expect in upcoming time. Another stock which we are like in Adani pack is Adani Port. So Adani Port chart, if you check, the recently stock price has given a correction and retested its 100 days moving average. And from there we can see that V-shaped recovery is there. Adani Port has given a breakout from falling trend line also. So definitely Adani Port can be the stock. We can like to go long at current market price. Keep very strict stop loss of 1300. And looking at price chart, we can again expect 1400 kind of level in upcoming time. So Adani Port and Adani Power both are our preferred pick into this Adani pack.
All right, Adani Port, Adani Power, we'll keep an eye out on those two Adani stocks from the entire pack that has been moving consistently for the second day in a row, and all stocks in the green zone and in a very positive traction being seen all across the board. We'll go to another stock and take a view from Kiran Ji, and that is on LIC. I wanted a view. A very strong surge of 5% and above can be seen on LIC today, and it's leading the entire PSU pack in terms of the percentage rise. The LIC has been granted about 3 more years to meet the public shareholding norms, 10% public shareholding norms, which are set by SEBI, and perhaps that's led to this positive momentum right in the morning, and it's held on. 977 right now for LIC. How would you see the charts of it?
So looking at LIC insurance chart pattern, the previously also stock price has found resistance of 1000 rupees and corrected to its previous support of 860, 850. Now again stock price is getting support of those level only. Recently we have seen the stock price has a resistance of its 100-day moving average, 20 and 50 days moving average. However, today's move is clearly suggesting that prices crossed this 20, 50 days moving average. Secondly, stock price is at verge of giving a breakout of its falling trend line also. So we are giving a conditional buy unless and until stock price is not crossing 1000 level. We are just waiting and wait and watch kind of list of LIC. If anyone holding this particular stock, they can hold this stock with a strict stop loss of 900. If stock price some further correction should happen. If 900 level is not broken out and 1000 rupees level is broken out, then we would like to go long. So conditional buy is there, buy about 1000 only. Once the 1000 level crossed, we can see some fireworks on LIC and expecting 1100 plus kind of a target in very short time. So
okay, so that as far as LIC is also concerned. Yes, Shell?
Yes, actually, continue, no issues. Continue, no problems.
Kiran, the other one that I wanted to discuss was Paytm with you. It's off the low point of the day. It's again moving towards the day's high point as well. How would you look at this one? It's been volatile over the last few trading sessions. What do you see for the charts as far as 197 communications is concerned? 343 right now for you, a percent higher.
So looking at recent chart of Paytm after the recent downfall of somewhere around 318 rupees, we have seen multiple rise come over on Paytm. However, those are the lower highs. So initially the first recovery attempted 449, another recovery attempted that was 437. And lastly, we have seen that stock prices just touch 380 level and came down. So it's clearly showing that stock price has resistance of its falling trend line, number one. But on positive side, we can see that 4 days back, stock price has formed a bullish engulfing candlestick pattern at very rock bottom low. And we can see that low was 310, where previously stock price has made a low of 318. So very low risk trade is available at current market price. It's a 100% technical call. We don't know about the recent development or anything is coming out or not. So technical basis, definitely a very good bet on Paytm. If someone is very bullish on fintech in India, then definitely Paytm can be looked at current market price because of its very low risk call now. So keep a very strict stop loss of 310 and go for positional bet rather than for the trading bet. If 310 is hold, then our first target is 400. Once the 400 level cross, then there are chances we can see some 500 kind of a rally also. So definitely Paytm is on our radar with a very strict stop loss of 300, and we have already suggested to our client with same stop loss.
Right. Sakshi, I think we must note down the price of Paytm today, 343, and today's date, May 15th, for two reasons. The news driven is that it's going to be removed from the MSCI India index. That's the reason why, well, it might be up, but that's the reason why it's in news today, and therefore you have this kind of an activity. And perhaps this marks possibly the low that Paytm will ever hit. So let's see till June 1st when all the movements within the MSCI index will be done, and maybe a gap of 5-7% from here, 325, 320 is where possibly everything that could happen worse for the stock will be priced in. So 320, 330, 335 is a good zone for the real long term quiet buyers of value to perhaps look at Paytm. But again, one must take view from an independent financial advisor. This is my understanding, not that I'm going to buy at these levels, but this is what I'm trying to tell you has happened over millennia when it comes to markets. Buy the bad news and then just wait for it to sort of correct. Okay, now two stocks I want to mark. One is Indigo. Ladies and gentlemen, a fresh record high, 4,310 in front of me, and fairly okay kind of volumes. This is something that needs to be looked at, so please keep an eye out on Indigo. Now the issue is that odd kind of shares are running in the market today. Most of the PSU pack is very quiet, nothing much happening on that field, unlike yesterday. Yes, there are some stocks that are doing pretty well, stocks such as Shipping Corporation of India up 8% at 226. You have MSTC running 4.5% higher at 884, and stocks such as Patanjali 3.5% higher, 1378. Kiranji, 256 now. Anything that catches your fancy at this point of time?
So looking at overall PSU basket, which we are liking, PSU bank index I am saying. So Bank of India is one of the stock which we are liking at current market price. Looking at current market price on daily price, since last 3 days we are seeing prices were trading into the lower top lower bottom pattern. Today's stock price opened with the gap up. Did not sustain its high also, but the way candlesticks pattern is forming, it's a bullish reversal candlesticks pattern, number one. Number two, earlier ascending triangle neckline is there, so it's a case of retesting, number one. Number two, since last 2 days volume was not good when the fall is happening, and lastly the momentum indicator is into extreme oversold territory, so there are chances of reversal, so it's a 100% reversal candidate. So Bank of India in PSU basket, which we are liking. So at current market price we would like to go long on Bank of India is 125. Keep very strict stop loss of 120 or 118 and can go long at current market price. We are expecting price target of 140 kind of in short term. Another stock which we are liking is Axis Bank. Axis Bank is also a candidate of retesting. Earlier there was a breakout of ascending triangle pattern at current level only at 1125. After that breakout, stock price has touched 1180, 1190, and from that level again stock price is available at 1120, 25. So at current market price, Axis Bank is also good. Say for example, Bank of India is a small cap bank, whereas Axis Bank is large cap bank. So you can look after the Axis Bank also. Keep very strict stop loss of 1100 and can go long at current market price. We are expecting price target of 1200. So overall on banking side, we are liking these two stock. One is the Bank of India and another is the Axis Bank.
Okay, fair point. What else is buzzing? Sakshi, I think let's look at the capital goods space, and I utilized the entire afternoon to make a set of stocks which is somewhat similar to what Siemens does. So let's look at some names that are buzzing because Siemens came out with a great set of numbers. The first one is an unusual company. I can't remember discussing it ever on Business Today. Kirloskar Pneumatic. I think in the morning you had mentioned its earnings, if I'm not sure, but I vaguely remember hearing that name. 10% higher, ladies and gentlemen, 1162 record high. Thermax and Siemens we've discussed. We've also discussed KEC today. Let's look at CG Power, priced at about 643, 5% higher. We have Vesuvius India, 7% higher, 5188, and a whole host of stocks such as GETND, 1130, 5% higher. Voltamp Transformers, 4% higher, 10,768. Bearing companies SKF India, Timken India, and Schaeffler. So I Sakshi stopped at about 35 to 37 stocks, and all of them are great companies, phenomenal balance sheets, multi-bagger stocks over the last so many years, so many decades. And given the kind of earnings that have come on Siemens and ABB last week, there has been a blowout performance coming in this segment. Remember, we focus on 2 or 3, L&T, BHEL, and then perhaps maybe 1 or 2 from the usual pack, Thermax, but sometimes we focus on Siemens and ABB. But there is this whole underground backyard kind of a capital goods space that is doing phenomenally well. Kiranji, apart from Siemens, ABB, L&T, BHEL, anything that catches your fancy here?
So on this capital goods sector, ABB and Siemens has given a very fantastic move. So as of now, you asked me another counter, but we are actually liking ABB only. The reason being, last week there was a very good long build-up has happened, and on Monday only there was a furious movement has happened. Now since couple of days, stock price is into the consolidation phase, and overall if you check its monthly and weekly chart, the stock into the very bullish structure. So apart from any other stock, I think these stocks can again move very good at higher level. So ABB can be the stock we like to chase this momentum. So at current market price or any dip towards 7900 would be the great buy. Keep very strict stop loss of 7800, and there are chances we can see price target of 83, 8400 in short time. Another stock, if you want to go on a blue chip company, then Larsen and Toubro any day is a very good stock. If you compare with ABB and Siemens, L&T is available at very lower level. The Siemens and ABB both are trading at higher all-time high, whereas Larsen and Toubro recently given a correction from its all-time high at 3800 to 3400, and recently it's retested its 200 days moving average also. So I preferred one should go long on ABB and L&T both together, so it will be the balanced portfolio with you. So if anyone go long with L&T at current market price, definitely they can go. Keep very strict stop loss of 3200, and we are looking price target of 37, 3800 in upcoming time. So ABB and L&T actually we are liking into the this capital goods sector.
All right, on that note, well, thank you so much, Kiran, for being with us on this edition and sharing all these ideas with us. Viewers, now it's time to also welcome our other guest on the show. We are now joined by Sharad Avasti, the head of research at Smiths. Warm welcome to you, sir. Thank you so much for taking the time out. Your own sense of the markets, 70% of the election phase is now done, just 30% remaining. What goes next? Are we inching closer to the end of volatility and moving to a new phase of upward run on the markets?
I think the way it has started, to expect volatility to end before the results would be a harsh thing to do. And south and the eastern part of the country is supposedly going to be the most volatile part of the elections. And most probably some positive surprises maybe for the ruling government. But most of it will depend on the results. I think a large part of the election is being played out on social media, and both parties are equally active on that space. And I think the type of to and fro of blames and everything is going on. It's very hard for anyone to form an opinion. And in a country where even most exit polls can't really predict elections, I would not really stretch my neck out and do that. But I think, whatever the outcome, the possibility of a very adverse outcome is very remote, according to me. But again, with the caveat that, elections are a hard thing to call in a country like India. It's a vast demography. So it's very hard to call elections in advance. But I still would go with the feeling that most probably we are not going to hit a very abrupt kind of scenario where, we don't have a majority for any government. So I think that's a very far off thing to happen. I'm not expecting that. But yeah, in the meanwhile, maybe that 400 par and everything, if that gets a bit of jolt, maybe some reaction prior to the elections. But I don't think it's going to be something major. But a 5-10% cut here and there is a very normal thing in the total market balance.
Okay. Sharaji, good afternoon and a very warm welcome. Till about last Friday, I'm sure you would have been amongst the very few people being happy and thrilled on Dalal Street, because a substantial fall helps value pickers such as you to utilize your stock picking skills. Anything that you purchased for your clients last week?
We have advised them to buy a bit on Coforge, ideas like Dalmia Bharat, uh, basically stocks that have corrected substantially, and maybe the long-term story is very much intact. Maybe a bit of L&T and ITC.
Okay.
Recently, we have recommended on the smaller companies, Sheela Foams as a very good long-term idea. So I think it's a continuous process we keep on doing, but it's not that the markets have corrected so much that you get an across the board, hunky-dory kind of situation where you can pick anything. Maybe that was the situation 1.5 year ago. But right now with this 5-6% kind of correction, I don't think you get too many ideas. But yeah, some ideas where the correction has been steep and good enough, and the long-term fundamentals are still intact according to our understanding. We are gradually trying to nibble into those stories.
You believe Coforge at the present moment, or maybe last week, offered an opportunity to get into the counter for the medium term? What are the prospects according to you, and where do you think it's headed?
I think what I hear from the management in terms of the targets that they are putting up for the revenue growth in the long term, I think it's going to be, if they can turn it around, that's going to be a fantastic journey. The flip side is only that maybe the earlier promoter was a very good helping hand from them. Now there's no promoter; it's largely a professionally run company. So that is one headwind maybe, but I don't think that would be a problem with the kind of business they are into. And most probably the mood around discretionary spend would also substantially improve. I think last time we have discussed at length regarding that, so we'll not ponder on that. But I think the type of growth rates that they are telling, even conservatively, if I start to look at it, I'm looking at targets of, anything between 6,500, 7,000 to start with. And I think even beyond that, if you're looking for an idea where you want to stay put for a 3 to 5 year kind of horizon, the type of clarity with which the company is coming out, I think there is a possibility that this could be an idea that you could continue to hold even longer for a 3 to 5 year kind of horizon, and maybe even double your money from here.
Okay, right. So maybe doubling of the money could also be seen. Mr. Vasi, also wanted to understand from you on Bharti Airtel. The numbers came out slightly on the subdued note itself. And even though the management con call is just on, and I was reading some statements from the management, they're talking about, ARPUs at 300 rupees. Or maybe an improvement with the mix coming in. They're talking about looking at acquisitions in the B2B segment. They've also talked about how tariff hike is urgently needed for the entire industry at large right now. How are you looking at Bharti Airtel? And even though they do believe global business continues to be soft at this point in time, at 1300, would you still be a buyer?
No, I would not be a buyer per se. We had it for some time in our portfolios. We had recommended it to most of our clients. But at these valuations, I think maybe most of the positives are priced in. But as you rightly pointed out, in case the management can pull off the kind of ARPU improvements that they have been talking about with tariff improvements happening, and FTTH is something, that could substantially boost growth for them going ahead. And I think there is a lot of unmet demand in that space, even on the outskirts of tier 1 cities as well as tier 2, tier 3 cities. I think there is a huge potential for that to grow. So that certainly plays in as an advantageous thing for Bharti. How the 5G monetization on the B2B side happens, that is something that is still to take place largely. But I think if the ARPU improvement that they have been talking about for quite some time now, and the comparisons are to the developed world or even the semi-developed world, that we have the lowest tariffs and all that. So I think if they can pull off, I think it would be a very good thing that could result in some re-rating for the stock. But if you look at the valuations right now, I think what is it trading at? I believe it's already gone up to somewhere around 30, 35 times. So from here on, I think unless and until this RPU improvement starts happening, so we are expecting next year to be 50, 51. It's already trading at 1300. So 30, 35 times it's already trading at. So I don't think unless and until you have a more than 24-month kind of horizon, you would end up making too much money. Maybe in the short term, as the RP improvement is announced, or a tariff improvement is announced, then maybe you receive a short spurt in the numbers. But I think you're already expecting what next 2 years, 68, 50, 70, 80% kind of growth. That would take the earnings to around 51. So it's already trading at 13 and 30, 35 times 1 year forward. So I don't think there's much scope in a 1 year kind of horizon. But yeah, if you're extending your horizon to say beyond 12 months to around 18 to 24 months, then most probably you can expect 1500 to 1600 on the stock.
Okay, understood that. I also wanted to understand a broader questions from you. You did talk about the markets and what you expect going forward. It's the FIIs that have been relentless sellers in the last 15-20 days odd. $3 billion worth of stocks have been already sold off in the recent sell-off by the FIIs as well. Now, we had been hearing everyone talk about how India is a bright spot. India is the one of the fastest growing major economies in the world. Prospects are good. Growth story is strong. Then why are FIIs really pulling out from India? Is it that China is more attractive right now? Are they putting in more money in China, whatever they're pulling out from India? How are you really looking at the scenario?
Well, it could be what you are saying, because in terms of valuation, if you look at China and India were poles apart over the last, if you leave the last maybe 2, 3 months, I think China and India, or China or the whole world actually was poles apart. The whole world was rising and China was continuously falling. I think such homogeneous relationship was only visible when when Japan collapsed way back, when Japan was collapsing and the rest of the world was going up. So I think China, a lot of exit has happened from there. Valuations have turned very attractive, and with this kind of infusion that they have done over the last 1.5 years, there is hope probably that China might be coming out of the rut. But if you look at the ground realities, I think real estate still continues to be a problem there. So I'm not really sure whether it's a short-term bounce back or a sustainable pullback from them. Uh, it's a large economy, obviously it does play a role, but yeah, there could be some funds that might be moving because of that. And I think some funds could be, the shorter-term funds, which are largely hedge funds, and some of the larger funds which usually want to avoid, uncertainty. And elections, we all know in India, could be a very big uncertainty. And if the incumbent government does not come into power, I think a lot of the view about India might change. And in case there is no majority or a hung parliament, I don't want to go there. But I think largely, I think the FIIs, it could be the short-term money out of hedge funds, which all the algo funds basically, which follow momentum largely. And yeah, there could be some shift into China, people betting on a probably high margin of safety, because the valuations were very compelling around 3.5 months back. And most probably it cannot go further down. And even the economic side, there could be some improvements there. But I don't think that even now, if you're a long-term investor, China remains an attractive place in terms of demography, etc. I think India outscores China over the next 30, 40 years. So yeah, the shorter time frame guys who could be shifting between value and momentum, they might be shifting here and there. So maybe that part of it is playing out. But now I think FIIs don't really impact us so much as they used to impact a decade back, maybe, or even 5, 7 years back. The domestic inflows are strong enough, sturdy enough to counter that.
Right. And we are very happy to see the back of FIIs maybe over the next 5 years or so. They were responsible for extreme volatility on domestic stocks over the last 15-20 years. As long as Indian companies are owned by Indians in majority, that makes a perfect sense. Sakshi, there was a time when a lot of foreign investors were more hopeful on the Indian corporate sector than what Indian investors were as far as putting money is concerned. But over the last 5 years in particular, this has changed dramatically for the better, and let's hope it improves as well. Sharadji, let's look at a sector which I am sure is close to your heart, the MNC bearing companies. We'll start with Timken, ladies and gentlemen. There's a digit change in Timken, all-time high today, and it's on a burst of volume. It's rare to see 2.2 lakh shares of Timken traded, but they have. And similarly, a burst of volume on SKF India. Both these counters at record highs. Sharadji, what is happening? And are these stocks in the value zone according to you, or are they now expensive again?
No, I certainly think they are not in the value zone. Both these stocks are rarely in the value zone. I believe Timken hasn't traded at lower valuations for quite some time now. Maybe the 2020 part was the only part you had some lower valuations there. Similarly for SKF also, I think most bearing stocks, they play a part. I think these are decent companies. They've grown leaps and bounds over the last 20 years. They've been enormous capital formation companies. But at these valuations, I think both these stories don't really make sense. Maybe Timken's playing out a bit, on the tin prices improving, etc. But I am not very bullish on the commodity cycle of it. And bearings, yeah, long term, I think it's a good story to hold on. But at these prices, it's better avoided.
Okay. Within the capital goods space, after the earnings that you've seen coming in from Siemens and ABB, is there anything that catches your fancy in that space? Thermax has come out with great numbers. Well, of course, all of them are getting reflected very aggressively on prices. But is there an undervalued asset in the capital goods space according to you?
Yeah, I think LT certainly does make the cut. When I look at the valuations, I think you have a mix of defense, maybe a 3D building. They would be the first ones to do that. And there are a host of things, hydrogen, etc. A lot of diversification or a lot of new energy ventures that they're doing into. But I don't think the valuations really justify the kind of work that LT is doing. And it's still comparatively much cheaper to the likes of Siemens, Thermax, or an ABB. Though they do also have some triggers, like ABB has some triggers on some of the new energy based business. But beyond I think at these valuations, most of them are trading at what, 70, 80 times forward. And the re-rating has been stupendous. And I need to clarify that I was not very bullish on these stocks for quite some time. But they've outperformed and they've performed much whatever I had expected. But at these valuations, I would still continue to be a bit jittery about these ideas. I think L&T does make the cut. The valuations are still attractive. They have a lot of businesses that can scale up into a different league over the next 3 to 5 years. So at these valuations, I would be most comfortable buying into L&T, the biggest name, obviously, and a very diversified business mix. They have a place in a lot of the new businesses that are coming up. So I'm very bullish on L&T. I think initially you could start with targets of around 4,000, 4,100. But I think it has potential on legs to catch up even beyond that. The Hyderabad Metro rail monetization could be one big trigger for them. So I'm very bullish on L&T. I think the valuations are very attractive there.
Okay, very bullish on L&T over 5,000 kind of levels. So definitely a positive view on the poster boy of the capital goods and the infra space in India. Let's again look at some of the, yeah. Yes, sir.
I think it's rare for Sharadji to comment on a frontline stock with such emphasis as the one that he's given on L&T. So, one of those rare instances where we've been able to take out 2 long calls from him, which is L&T and Coforge. And I hope readers are paying attention. Remember, it's like, pulling a bone out of a hungry tiger's mouth to get, trades to bhuli jao, to even get stocks recommended from Sharadji. So one of those rare days. Thank you so much, sir. आज हमारा जीना सफल हुआ. Sakshi, yours.
Yes, so there you have it. Very bullish calls coming in on L&T and Coforge, and we'll continue to track this from here on too. The mid-cap basket is again showing strength. The index is up 1%, outperforming the benchmark indices, and this is the space which is showing a lot of interest. Stocks like BSE are coming back in flavor, sir. 6% higher. Then, of course, there are many other stocks from various sectors. I'll just read them out for our viewers to know what's really buzzing in the mid-cap space. So, from the fertilizer and chemical pack, it's a fact. CG Power is one that's up 5.5%. Suzlon, of course, it's the MSCI move that's led it to move up 5% higher in trade. Indian Bank is another one. Sona Comstar is continuously on the move. Union Bank, we discussed in the morning, it's up and about. Supreme Industries is up. Prestige Estates, Oberoi Realty from the real estate basket. PB Fintech, again, Policy Bazaar is up and about. Cummins is up in trade, and many other stocks too. Is there any particular sector within the mid caps that you feel is likely to outperform now, sir?
Typically not a broader sector that we think, but yeah, I think agrichem is something anything or anyone connected to agrichem or a bit of the fluorination business could be ideas that could catch up because they have been stark underperformers for quite some time now. So maybe something like a Lakshmi Organic could do very well going ahead. Uh, Amongst the broader markets, I think, as I told earlier, Sheela Foam is something that I'm looking at. I think that could be very good idea. If you're looking at a long-term play, I think even the flexible packaging businesses could do very well once the margins, claw back to historical levels. So within that, I think Polyplex is an excellent company with an international footprint. So these are some individual ideas that I think, and within the space, I think, yeah, flexible packaging has gone down substantially. So that could be something that would show some improvement in terms of numbers. It could pull back. Similarly, the agrichem stocks or the fluorination related businesses, they could have very strong upsides over the next 2-3 years.
Okay, understood. But how about this capital markets related stocks, sir? Since all across the board we are seeing statements coming in, even from the government side. So, be it Mr. Amit Shah talking about a bullish move coming in post 4th of June, be it the finance minister reiterating the fact that there is a financialization of household savings that's taking place, and money is coming beyond the FDs and the traditional forms of investment into the stock markets too. How are you looking at stocks like, say, a BSE or a CDSL or the broking houses stocks, sir?
See, BSE, I would not be very comfortable. The valuations seem a bit exorbitant to me. Similarly, for most of the broking company stocks, also, I think I don't track everything, but largely whatever I track, I don't think you have much of an opportunity there. Maybe I looked at Edelweiss for around 85, 90 kind of targets. That could be decent. But some of them again are trading at very high valuations, and I don't think the growth will be such in linear fashion, will be similar to what we have seen. There will be J curves occasionally happening in the growth within that investment. I think still in terms of equity market investments or any kind of other financial investments other than bank deposits, we are still at a nascent stage. And as the per capita income grows over the next 2-3 decades, there will be a lot of opportunity for them. But whether most of it over the next 2-3 years is already priced into these stocks, I think, yeah, certainly most of it is priced in. So across the board, I'm not very bullish. CDSL, I think there is a trigger on the insurance part of it as it is getting electronified. I think that could be one thing that they could benefit substantially out of it because it adds a new revenue stream to them. And this revenue stream, most probably the other part of it, which is the demat part of it, will continue to grow. So I think CDSL could be one idea you could look at based on the fact that this insurance dematerialization could give them another trigger. And I believe insurance will continue to be a very bright spot in India. So they could benefit out of it. But the exchange related and broking stocks, I think other than Edelweiss, I'm not looking at anything else.
Right. Where do you think CDSL will be, Sharadji, a year from now?
No, that's a hard task for me. But what I'm looking at is that this insurance business dematerialization opens up a very big opportunity for them. And I missed the bus last time when it rallied up. I never believed that this kind of new demat accounts could be opened up. And the way they have cornered market share, I think it's been stupendous. So conservatively, what are you expecting? 50, 55, 60 rupees kind of over the next 2-3 years. I think with insurance dematerialization, you can expect this to be higher by around 15-20 rupees. So, 70, 75 rupees, 40 times. 1 year 2800. So 1 year you could expect it to be around say 2300, 2400 maybe.
Okay, so we are at about 21, 22 on this one, a mild upside. So, Sharaji, what I have done is that I have created a portfolio under your name, which I have named as Deep Value. And the stocks that I have added is some of them willingly that you've given us today: L&T, Coforge, Lakshmi Organics, and Polyplex. With a little bit of gentle prodding, you've added Edelweiss, and with half-heartedness you've added CDSL. Is there anything that I have missed out in today's conversation?
No, I think largely Sheela Foam maybe you would have missed out. I think that's something that's gone down substantially over the last one and a half year.
Of course.
And I think there could be a lot of improvement there.
Okay, ladies and gentlemen, this is a portfolio made by one of the finest brains on Dalal Street when it comes to buying value and holding on for a very long period of time till value turns into growth, and of course you are sitting on a multi-bagger. Remember, the reason why we very often get Sharadji to our studios is to inject that very necessary note of caution into the froth that has enveloped us all on the large street, and it is stocks such as these, the ones that he has suggested that should be purchased for the long term. Of course, please also have a view from an independent financial advisor, but 6 stocks we shall now be tracking from Sharadji's side. The market, ladies and gentlemen, flat as flat can be. I am hoping that the Nifty will close above 22,200. Remember, it's the weekly expiry of the Bank Nifty. It's done nothing, 143 points lower, 47,700. And of course, the India VIX mildly up today, 0.12 at 20.32. Nothing at all in terms of broader market rallies. We've seen the entire capital goods sector grow up dramatically, and parts of the PSU basket are up, alive and ticking. Stocks such as BPCL, stocks such as LIC, and stocks such as Siemens, the entire bearing space like Timken, SKF India, Schaeffler, and of course the entire power space today. Sakshi.
All right. With that, we will thank you, Mr. Vasi, with us on this very special edition and sharing all these wonderful ideas and insights. And we will continue to track the stocks that you've shared with us as well until we meet next time on air. And we hope that we do that soon as well. Hope you have a great time until then. Viewers, let's start wrapping up the markets. 22,200 on the Nifty. It's hovering around that level, 15 points lower, so it's off the lowest point of the day for sure. The Nifty Bank has also inched a little higher from that low point. 0.3% of a downtick still remains. It's down by about 145 odd points as far as the Nifty Bank is concerned. 47,709 for this one. Let's also look at some of the sectoral moves if we can, to see how the trade is shaping up towards the end. We are just about a minute now from the closing of the day. So the mid caps are up by 0.9%, small caps half odd percent, mid caps are outperforming. India VIX at 20.34, so not too much of a worry on that front as of now. Autos were definitely weak. Financial services, FMCG, IT, media, private banks, these sectors dragged. But what pulled up the markets from the lows was the PSU banking index, 1.5% higher, realty, consumer durables, healthcare index as well, and the oil and gas basket. Coal India, Cipla, BPCL, Bharti Airtel, Power Grid and NTPC were the top movers today. On the downside, you had stocks like Tata Motors that dragged almost 2%, Asian Paints, Bajaj Auto, Eicher Motors, Britannia, Tata Consumer Products. In the F&O space, Siemens continued to be the top mover, 6.5% higher, stock of the day for sure. Cipla, Oberoi Realty, Coal India, and Power Finance Corporation. These were the big buzzers. On the downside, however, you did see Colgate Palmolive, Aarti Industries, Mahanagar Gas, AU Small Finance Bank as lows that were being spotted in trade today as well. And as we see, I think we do have the closing ticks now. I think about 22,209, 210 odd levels is where we are looking at ending. Anything else, Shal, that you want to point out?
Sakshi, I think we'll note with the increasing, how should I say, move on Bharti Airtel. It's ended at its day's high, and as we've been pointing out incessantly, that this is something to be looked forward to. A lot of news coming in that post elections, there might be a concerted effort by the three players to raise the ARPU levels, and therefore our telecom bills will go up. Remember, tomorrow is Vodafone Idea's numbers day. Let's see how they fare. But this is the lone stock, Sakshi, which has caught my attention, and of course BPCL as also the entire defense space, Hindustan Aeronautics, BDL, Mazgaon Dock, all ending at day's high, Sakshi.
All right, viewers, 22,210. That's the level at which the Nifty is ending at. We will wrap it up at that note. Many thanks for being with us on this very special edition. Goodbye from both Shell and me. But do stay tuned on to Business Today as we continue to get you exciting conversations around earnings as well as everything that's passing on the street.
On the question of, US, Canada, religious freedom, etc., do they want to influence us? Answer is yes. They do want to influence us because many of these countries feel that they have influenced the world for the last